course, we saw this huge rally into cyclicals. We saw small caps gaining ground. We're talking about 20% or so just this month upside for the Russell 2000. This GTV chart on the Bloomberg showing how the relative strength index, really the 14-day momentum, was at a 2-year high compared to the S&P 500. So does it make sense that we're seeing a little bit of a slowdown now?
Yeah, and I would say that today's pullback or slowdown, first of all, it's pretty small. We're not talking, 1 to 2%. These types of moves that we saw back in October. This is a healthy pullback. And when we look at just where we were in the U.S. markets, as of yesterday, we were up 11% for the S&P 500 and 22% for the small cap S&P 600. So having a day where we go on a pause, we take in some economic data is certainly very healthy. But I don't see this as a reversal. I still see really hope for a larger breadth, more stocks participating in the bull market and recovery as we head into 2021.
So would you call this, as you said, more breadth or a rotation out of those tech stocks? And if you're willing to stay in those tech stocks, where would you look at, especially those stay-at-home stocks that perhaps may not work post-pandemic?
Right. So I'm not going to say that it's going to be a full-on, absolute reversal. It has, certainly the tech stocks have been laggards in this month. They've still been up. They haven't been negative, but they have been falling behind. I think really right now this is more of a catch-up. So I'm not saying you need to necessarily get out of tech stocks, but I'm very happy to see that there's greater breadth, i.e. there's more companies that are going up, and we're not just relying on the megas. And so, if you own some of those megas, it may be time to take some money off the table and put them into other companies that certainly have more potential going forward into 2021. Specifically the smaller cap stocks, which really have been laggards and are looking to be the winners going into the next 12 months.
So, Erin, you kind of see this tension play out in the markets, this sort of tantalizing want to look beyond the pandemic to see what a post-pandemic world looks like. And yet the reality is that we continue to see higher cases. The economic data is starting to be a bit sluggish as well. So what sort of sectors and stocks would fall nicely in between to be able to, I guess, have one foot in each of those worlds and still survive pretty well?
Well, the thing is, obviously, the stock market and the economy are two different things. And typically the stock market tends to look 6 months forward. So even though we are still facing additional lockdowns and additional economic challenges, particularly over the next 6 months, with all this positive vaccine news, the market is really looking forward into the second half of 2021. That being said, as we go into the next 6 months, I'd still say these are the opportunities to get into some of the sectors that have been a little more beaten up, some of the financials, and just be more diverse. We don't have to just be as across the board with the mega caps. I'm a big believer in ETFs and getting exposure into broad market indices like the S&P mid cap and the S&P small cap. And then I think the stocks that are really at risk what are we going to see in a post-pandemic world is really some of the stocks that have just been astronomically high, and particularly relating to the pandemic. So I think some companies like your Zoom, Roku, they're a little more vulnerable if people do start to change their behaviors even slightly. So there are going to be winners and losers, and I really think it comes down to fundamentals. So I'm not so focused on actual sector calls when it comes to pre or post pandemic, but I really think you need to look at who has those solid balance sheets.
Right. So, Erin, if you're saying we need to be looking 6 months in advance, we could see policy normalization by then, right? If the vaccine euphoria actually plays out, that could be the case. Is the market pricing that in?
That's what they're starting to. And what we've seen in November, it has been a record reversal month. And what I mean is that the laggards or the losers, the beaten up stocks have been the winners, and the prior winners have been the laggards. And in fact, November has actually been such a big reversal month. If you just look at like winning and losing sectors, we haven't seen this kind of reversal since 2009, which was obviously the recovery from the previous recession. And so this is really a change in leadership, and something that I think is really saying that the market really is looking to a post-pandemic market and back to more normalized GDP growth.